Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about Friday's market rebound, Warren Buffett's annual meeting, and the health of the regional banks. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The market surged Friday around 2%. Why do you think this occurred?
Well, good morning, everybody. And good morning, Allison. So glad to have you back from school. Congrats on finishing your freshman year. As far as the question that Allison asked this morning, looking at this is the chart for the NASDAQ. And, last Friday, the market went up almost 2%. Over 2% for the NASDAQ, almost 2% across the board. A lot of that was from Apple's earnings, but let's walk the week back just a little bit. I'm trying to scroll this up here just a second. There we go. All right. So again, this is a 1-year chart you're looking at the NASDAQ. It's actually a 6-month chart there. Sorry about that. So, last week we had the Fed meeting and the Fed raised 25 basis points, which was kind of expected. Like I said earlier, before the quarter, we at Ankerstar Wealth had forecasted that the final raise is going to be somewhere this quarter. It's going to be either the one we just had or we have one more, but then that's going to be it. Well, if it's the last rate hike that we're going to have was the one we just had, then the market's going to celebrate that and move higher. So Thursday was kind of a digestion day, and then Friday, Thursday after the market closed, we had Apple's earnings, and stellar across the board. They announced a $90 billion buyback for their stock. So process that for a second. $90 billion of buying their stock back. So what does that mean for your individual shares? That means they're going to be worth more, right? Because they're retiring a bunch of shares. They also had a small increase their dividend, but every penny counts when you're talking dividends and you own lots of shares. So I think it's 4%. So Apple comes out after the close on Thursday with kind of the all clear moment, if you will, saying that, hey, we're fine. So things maybe aren't as bad as they seem. So Friday, the market takes off higher, again, largely a combination of the positivity from Apple's earnings, as well as people starting to figure out that the Fed is, likely done, in my opinion, or maybe one more. I think they're done personally, but we shall see. And really all kind of the bank failures and all the other headlines that are going with this interest rate hike thing they're starting to fade a little bit. So that's why we saw the market move higher. If we kind of go to a 3-month on the NASDAQ, went from 12,000 up to 13,300. So things are looking pretty good. And I do expect that tech especially is going to be able to find its feet here and continue to grind higher.
Next, Warren Buffett held the annual shareholder meeting in Omaha this weekend. What are some of the highlights?
Well, sure. That's for all of us that are in lifelong investors, this is a big moment. Every year, Buffett gets together in Omaha, of all exciting places. I was there earlier this year, actually back in December. Well, you were there too, Ali, for the Final Four national championship. But everybody descends upon Omaha annually for his Berkshire Hathaway's annual meeting. He and Charlie Munger are getting up there in the years a little bit, but you know what? The stuff that they're saying still pretty sound across the board, and it's worth a listen. There's plenty of articles out there. You can simply Google that if you like, but I did want to hit some of the highlights out there. These 5 hyperlinks if you're interested. Again, this is off of CNBC. The strength of the dollar is one question that they specifically addressed. Obviously, we have the debt ceiling debate going on. That's in my opinion, more of a political football than anything else. I do not see the United States government defaulting. We'll raise the debt ceiling and soldier on. Obviously, the national debt is a concern, but it's also been a concern for decades, right? So we shall see how that all plays out. But is there, the world's, is the U.S. dollar dead? No, absolutely far from it, if you will. Don't think it'll be replaced by crypto, any of that stuff. But I will, caveat it and say that these folks are on the older side of things. So their ability to see something like that come would be a little bit blinded, right? Because they're so used to the world the way it is, not the way it will be. So caveat their thoughts there. But I also agree with them. Dollar strong. I'm not worried about it. You can buy treasuries right now and not have any concerns, in my opinion. Second one there, Apple's different. Yeah, 100% in agreement. He says it's better than any business that they own. I agree. It's been, for a decade now that we've been in business here at Ankerstar Wealth. It's been our top holding, and it's the top holding in almost every portfolio we have, unless your risk doesn't allow for it. So Apple continues to prove itself over and over again as the best out there. Next one, Munger. Sometimes portfolio diversification is diversification. We believe that here. We think if you continue, if you spread your bets across or spread your investments, I should say, across everything that's out there, you're owning the good and the bad. And why do that? Right? If you're going to make this an intellectual effort to invest instead of just buying the markets and hoping for the best, which I think is a little intellectually lazy, in my opinion. But yeah, why would you own it all if you have the options to only own the best? And sure, there's some judgment associated with that. But yeah, we don't, if your portfolios are with us, you don't have a million holdings. You generally have 14 to 20. Sometimes 25, especially if you brought some of your own investing, holdings in. But we don't own everything. We own specific chunks for specific reasons, and that that positions us to outperform. The strategy has worked fantastic, but be your own judge. Commercial real estate's the next thing he talks about. Hey, across the board, all of real estate's being affected by the higher interest rates, not residential and commercial, but specifically commercial, where businesses didn't necessarily price things in correctly. But it becomes strength of balance sheet there. If you have cash on hand, you can survive any interest rate increase. If you're levered to the hilt and interest rates change on you, then obviously that can take you down as a business. If businesses start folding, then commercial real estate is obviously like the next domino, if you will, that then they default on their lease contracts, and then commercial real estate's holding the bag. So you can have exposure there. I just wouldn't have a ton of exposure there. I kind of agree with them. And then lastly, Charlie Munger weighs in on AI, which is almost kind of funny, right? Just because of the age. And I'm not, even over 50, I'm stuck in my ways to some extent. So I have to break my own paradigm and force myself to intellectually look at things from a different point of view with AI. And, I kind of see all of it. I see the AI being the end of the world. Robots fix robots, and then they don't need humans, and then they take the planet. Okay. Yeah, I think that is a course of action that is possible. Not probable, but possible. And you chuckle, say, I've seen too many movies, but this is also what Elon Musk is saying, if you've heard of that guy. So it does need to be regulated to some extent. His comment, Charlie, not to pick it apart, but just to at least make a comment on it. He said old-fashioned intelligence works pretty well over AI. I would say at the synthesis level, yes. But at the basic, I talk about it here. If you ask a question like, hey, what's the difference between a Roth and a traditional IRA? I used to type an answer for you. Now I just put it into GPT, It spits out an answer. I screenshot that and send it to you. It better and faster than my mind could certainly do a task where there's not synthesized information. Now, applying it to your situation, maybe that's straightforward. Maybe it's not. Everybody's just a little bit different. So yeah, I think that's what he's getting at there. But certainly AI is here to help all of us in all career fields that it can to kind of help us be a little better at what we do. So that's kind of a recap of the meeting. Again, if you want to go through and read some notes on it, it's widely available on the web. But Buffett and Munger still going strong, saying smart stuff, and you should listen.
Last, the health of the banks has been in question lately. Are we at risk of more banks failing, or do you think the worst is behind us?
Personally, I think the worst is behind us. That's a judgment call, right? Because we just don't know. Largely, we were surprised by banks failing off of the interest rate hikes that we had. But remember, we had 10 straight hikes, right? And four back to back, if I said that correctly, 75 basis point rate hikes. So folks that deal in leverage on a daily basis, yeah, that's kind of a heart attack move. So yeah, banks are supposed to be solid. We can count on them. And when they fail, that scares the crap out of everybody. I totally get that. Just realize that the government did hop in and say that, they'll back you as the depositor. So your money's safe. They're not bailing out the bank. They're making sure that you, the, person that has money there, is not losing money. So I think we're up to the count's either 4 or 5 now that banks have failed. I think, of course, we may see 1 or 2 more, one-off that have really been in denial to this point. But I think the damage has been done, especially if we stopped interest rate hikes, meaning we've had the last one. I think everything will be fine from here. How to invest in that, you can go into these individually. I think there's a ton of risk in that. I like KRE. It's an index fund that focuses on regional banks. I think that's a great place to have some money just because it sold off so hard. And how much further down can it go? Well, things can always go down more. That, have to own that. But from the risk reward perspective, I think it's just a little bit of risk to the downside and huge reward to the upside as the banks again get healthier from this. Weed out the bad, the rest are stronger, and we go on from there.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all I have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.